Alibaba got the boot. We bought more innovative industrial properties and received almost $450 in dividends in the month of August. Hey, what's up? I'm Russ, and you would have known about all these had you signed up for the free fantabulous and fun weekly newsletter. And also, if you want to look at the portfolios anytime, head on over to thedividendtracker.com where you can check out the taxable account, the self-directed IRA, and the Roth IRA at your leisure. Both of those links are in the description below. So we did a bit of tidying up in August by getting rid of our entire position in Alibaba. We sold all 10 shares at $95.85 on average. Now, they don't pay a dividend, so there was no patty lost, and taking a page out of Warren Buffett's playbook, he won't invest in something if it's a little bit hard for him to understand, so he puts that on the too hard pile. After looking at Alibaba, I just think it's a little bit too hard for me to personally understand to be a long-term investor. We also eliminated all 30 shares in the Roth portfolio of AT&T at $14.60, and with those shares went $33.30 in annual dividend income. And sticking with the telecoms in the Roth, we also eliminated all 15 shares of Verizon at an average of $34.33 per share, which took $39.15 of annual dividend income along with it. And adding those two together was $72.45 of projected annual dividend income lost out of the Roth portfolio. One thing I always say that I wish I knew was before investing in AT&T and Verizon for those big dividend yields was just how much they would struggle because the telecom business is highly capital intensive, it's very competitive, and I think paying a dividend really is a drag on growing the business. As you see here over the last 10 years, when you compare Verizon, AT&T, and T-Mobile, T-Mobile has a 468.30% total return compared to 5.3% for T and 20% for Verizon. And remember, that's with all dividends and distributions, everything reinvested into the business. T-Mobile is just cleaning their clocks. Now, you know that I get a lot of ideas from Seeking Alpha, and I think it's just a great site. Well, Seeking Alpha has a limited time $50 coupon off their annual premium subscription. So instead of paying that $239, you're going to use that $50 code with my link in the description below. Check it out. And for what we bought in the month of August, we bought more Altria Group, ticker MO, 10 shares at $44.07. I really think Altria is just going to be paying those dividends for many years to come. Because they are a dividend king, they just raised their dividend yet again for the 54th year, 4.3% dividend increase to 98 cents per share per quarter. And that gave us $39.20 of projected annual dividend income. We also added 2 shares of the beaten down retailer Target at $128.22 on average, which gave us $8.80 of projected annual dividend income, which we will just call Patty. Hi, Patty. I think this next stock is going to have a lot of money coming its way with the presidential elections and the broadcast networks that they own, which is Nexstar Media, ticker NXST, which we added 3 more shares at an average of $160.91, which gave us $16.20 of Patty. Now, in the self-directed IRA, I do like to hold REITs inside of there because the dividends are not taxed right now, and the REIT dividends, the real estate investment trust dividends, are not tax advantaged. So if you can, I think it makes more sense to hold them inside of a tax-advantaged portfolio. But we added 2 more shares of Vici Properties, ticker VICI, at $31.02, which gave us $3.12 of Patty. Now, because interest rates have been sky high, all of the REITs have pretty much been beaten down, and Realty Income, the monthly dividend company, is no exception, and we added 4 more shares of Big O at $58.50, which gave us $12.28 of Patty. And remember, they do pay those dividends monthly. We're working our way to 150 shares of SCHD, so we added 9 shares of the US Dividend Equity ETF at $74.24, which gave us $23.40 of patty. And it looks like the cannabis restrictions could start to be lifting at the federal level, so look out for one of the biggest players in the space. They are the landlord to many operators. We added 5 shares of Innovative Industrial Properties, ticker IIPR, at $79.27, which gave us $36 of patty. Now, all those added together gave us $139 of projected annual dividend income, but if we subtract the $72.45 we lost from AT&T and Verizon, that's a gain of $66.55 in projected annual dividend income we added. And we added to our growth position. I love dividends, but I also like opportunities for a growth stock when I see them, and I think Harrow Health has been beaten down, but when they do raise their guidance later in the year, I think that stock price is also going to raise well above $20 a share. So we added 52 shares of Harrow Health. A lot of that was money used from Alibaba, and we bought those at an average of $17.96. Those were the sells and the buys, but what about the dividends, Russ? Well, I'm so happy you asked, because we received $130.43 from the aforementioned AT&T, $17.50 from Celanese, ticker CE, $53.28 from AbbVie, ticker ABBV. Nexstar Media paid us $78.30. Starbucks, S-Bucks, paid us $12.72. Energy Transfer, ticker ET, paid us $9.61. Main Street Capital and Realty Income both pay monthly dividends, so Main Street Capital paid us $34.50, and Realty Income gave us a nice $36.54. And we're not done yet. $50 from Enterprise Products Partners, ticker EPD, $13.20 from General Dynamics, ticker GD, and a little old $1.32 from Albertsons. Now, we are hanging on to those shares because of the merger that's going to potentially be going through with Kroger, and we hope to receive the full amount of that from Albertsons. And then $9.79 from Verizon, ticker VZ. So long, buddy. And we did receive 14 cents in bank interest from Charles Schwab, for a grand total of $447.33 in dividends and a little bit of interest in the month of August. So check that out. In August 2023, we received a total. Now, I do have my daughter's custodial accounts in here, which I don't really count that in our income, but we received a total of $458.56 overall, which is much better than in August of 2022, where we received $362. Now, I think it's important to know why you're investing and what game you're playing. So while we have not been beating the S&P 500, the dividend yield of the S&P 500 is currently 1.45%. And if you look at our combined portfolios, we have a yield on cost of almost 5%. So yes, we are not beating the S&P 500, but the game we're playing is to maximize that passive income from the stocks that we do hold, so we don't have to sell those stocks one day to get cash from them. And we have a current annual income of almost $6,600 on our balance of $146,000 on just those 3 portfolios that we do share on the channel with you. And because we like PepsiCo, obviously consumer staples are going to be our biggest position at 20%, and utilities is dead last at 1%. And our top income source right now, curiously, is Ares Capital, ticker ARCC, with 11.8% of the portfolio, followed up by the blue chip PepsiCo at 7.7%. Now, as we look through the portfolio, we are down to 34 holdings, and I'm thinking I'd be pretty comfortable right around 30 as things are right now. We're always on the lookout for opportunities, but I've consolidated over the last year or so a lot into SCHD inside of the Roth portfolio. But as things stand right now, as a percentage of the portfolio, PepsiCo is currently 12.4%, so that one is way up there, followed up by SCHD at 7.2%, and then Nexstar Media is our top 3 at 6.9%. And as I go down these just a little bit, Remember, you can always pause the screen if you want to look at some of the numbers that Simply Safe Dividends does share. SimplySafeDividends.com, by the way, is a little bit pricey, but I think it's well worth it if you're managing more than $10,000 or so. And I'd like to know, what do you think? Sometimes I see I have 10 shares of Lockheed Martin. I haven't been adding to them. Would you keep holding them or not? Target, we're at 42 shares. We're going to get that to at least 50 and potentially 100 someday. And Innovative Industrial Properties, they have an unsafe score of 40, but I think that's because of the sector. Those wins are starting to die down, especially with the news today. So I think Innovative Industrial Properties could be a really good long-term play, and they have very, very minimal debt on their balance sheet. Intel, as 100 shares, I do want to move on from that one, but I'm being stubborn and waiting to get the full amount of what we're down, which is 17%. So if Intel moves up 15 to 17% more, likely I will sell a covered call, get that little bit more, and hopefully exit the position and put it into something that is a little bit safer, something I understand a little more, has a bit higher yield than my 1.20% yield on cost. And again, McDonald's, Lockheed Martin, I'm always considering what should I do with those because we only have 10 shares, but I've become sentimentally attached to those. Starbucks, should just do it. 24 shares. What do you think? Just buy the one more, get it to a nice even 25. And our lonely non-dividend payer, Harrow Health, there it is, 100 shares, currently down 16%, but this one going to be a long-term play. So as a dividend investor, I know, but it's one of those growth stocks I want to take a risk on. And as we wind our way down to the end here, Albertsons likely will be gone, hopefully sometime around the end of the year, maybe early next year. And Warner Brothers Discovery, what do you think about Warner Brothers Discovery? 28 shares left outstanding on that, down 56%. So what are you doing if you still have those Warner Brothers Discovery shares because you were an AT&T investor and they just gave them to you? And then we have currently $780 of cash, little bit of dry powder that we're going to be waiting to spend. So that's what's been going on with the portfolio in the month of August. I would love it if you would share with the community below in the comment section. What are you buying? What are you most excited for? What do you have your eyes on in the month of September? And did you know I do a podcast and I just very recently talked about Johnson & Johnson being at the middle of a murder investigation. If you didn't know about this thing that took place in the 1980s, check out the podcast I did right here in the floating little box next to my head. And if you do that, I will talk to you there.